Hello and welcome to Got Stocks. Today is Wednesday, April 9th, 2025. Today is a historical day in the stock market. We're going to take a look at the Dow Jones Industrial Average. We're also going to take a look at the NASDAQ. We're also going to take a look at the S&P 500. We're going to look at a little bit of technical analysis. I appreciate and respect your time, so let's get right into the charts. Okay, so first on deck, we are looking at the Dow Jones Industrial Average is up 2,962 and change today, and that is a 7.87% move. That is a historic day. Let's take a look. The NDX 100 is up 2,054. That is a 12% move. Then we're going to take a quick look also today at the S&P 500. The SPX is up 474, which is a 9.5% move. Now keep in mind, this is a one-day move. This is a historical event. Basically, what caused this reaction, Donald Trump we made a statement that any of the countries that did not take any retaliatory actions will have a 90-day pause on the tariff impact. We are currently looking at a 5-year weekly chart. Each candle represents 1 week. We want to zoom in on this area right here. And the reason why is because this was a pivotal area that created resistance back in 2022. And this is going to give us a level of support currently. But we're going to draw that. Now we're going to zoom back in and we're going to come over to here. As you can see, broke through it here and it provided support here. What we're going to do now is move in a little closer. And this is our downdraft. We reached an all-time high of 45,073. We had a double top here. We've been in a downdraft based on Donald Trump's tariffs. This is a market meltdown. Let's take a look at this volume down here has spiked. Now what we want to look at is we're going to zoom in on this on a granular basis, zoom in on this on a daily chart to see what kind of volume came in today. This particular chart here is a 1-year daily chart. Each candle represents 1 day. And the reason why this is important, this gives us more of a granular look. We're going to look at the volume that happened today and what type of candle was produced. You really want to get your head wrapped around some basics of candlestick charting because it really tells the story. All the truth is in the charts and in the volume. Forget the noise, forget the news. It's all right in the charts. Take out the emotions. When we come into here, this is our area of support that we drew back in 2022. Let's zoom in on this area right here. As you can see, the meltdown really happened here when Donald Trump announced the tariffs that we were going to impose on the entire world. We're going to take a look at the volume that happened down here. This particular candle right here is capitulation. It reached a high, it reached a low, and it basically closed right in the center. This is a daily candle that happened a couple of trading days ago. Now, if you look at the volume increased, the following day, the market opens up higher and sells off all day long. And if you look at the volume down here, the volume is starting to dry up a little bit. That is the pullback that we're looking for. It was a quick pullback, but it was a pullback, and that's what we're looking for. But what is important with this volume increase, as you can see, the volume has increased. The previous day, the volume was lighter. And then when we look at Monday's volume, that increased. But what is important here is the market opened up here and we closed up at the top. This is an engulfing pattern. This is a bullish engulfing pattern that is a very powerful signal followed by a bunch of volume. Now let's take a look at the NDX. This is the NASDAQ 100. We are currently looking at the NASDAQ 100. This is the NDX composite. We have today's gain of 2,054 and change. That is a 12% move, which is very substantial. And this is today. We want to zoom in. This is a weekly chart. In November of 2021, this established a level of support. This level is supplying us with current support. This was a level of resistance that was created in November of 2021. This is the NASDAQ 100. This is a 1-year daily chart. Each candle represents 1 day. What took 10 months of gains was wiped out in less than 2 months. Now we're going to take a look at the QQQ, which is the ETF that mirrors the NDX. We'll click over to here. This is going to show us some volume patterns. As we look at Friday's meltdown, here's our volume. Monday looks like a nice reversal. The volume's starting to pick up. Then we have Tuesday is a down day, but the volume is drying up substantially. Today we opened here, we closed here, and the volume is starting to pick up. This is a very good positive signal. Can we pull back from here? Absolutely. Can we take off from here? Absolutely. That's what we're kind of hoping for. We are now going to focus on the SPX. This is the S&P 500 index. SPX 5456. It's up 474 today. That is a 9.52% move. This is almost a 10% move in one afternoon. This is an historical event. We are now going to look at the SPY so we can follow some volume trends down here. This is where we're currently at. We are going to zoom in. We're going to get more of a granular look at this. So when we look at the S&P 500, this topped out, it appears in January 3rd of 2022. So January of 2022, this is the week of, is going to give us our top. Now let's take a look at a 1-year daily chart, and let's take a look and see where the S&P 500 landed on support. We're going to zoom in on this area. As you can see, we came down to this support that was established in January of 2022. We're going to zoom in, get a little more granular on the charts here to take a look at some volume that came in to the indice today. When we look at Friday, the meltdown of Friday, this is the volume pattern here. Now we look at Monday, we have a reversal, sold off all the way down to the support area that was established several years ago, closed at the top of the range here, and the volume picked up. Yesterday, the indice gapped up. All three indices, the Dow Jones, the NASDAQ, and the S&P, all gapped up and sold off all day long, and everybody got spooked again. Watch the news. If you want to get scared about what's going on with the stock market, just watch the news. Watch the circus show. The truth lies within this chart, and the volume is right here. The sell-off was on lighter volume. This is the pullback that we needed. And now today, the volume came in. The volume is picking up. The indice opened up here, and we closed all the way at the top of the range. This is a very powerful engulfing pattern. This is very, very bullish. Now, can this pull back? If it does, we want to see it pull back on lighter volume. In this range, we want to see a light volume pullback if we get to pullback. Now, it's very possible that everybody gets excited now and we can be back off to the races again. So the moral to the story here is the markets are very risky. And when these meltdowns happen, they're always going to happen. There's always going to be crashes in the market. There's going to be bull markets, bear markets, consolidation periods. There's going to be substantial meltdowns that are going to be caused by the catalyst we'll never know until it actually happens. But when it happens, these are opportunities to go into the market and buy more. That's why the long game is the better game. So if you can buy on a weekly or a bi-weekly basis for several years, like if you're in your 20s, 30s, 40s, or 50s, bi-weekly, even monthly, you're buying when the market's high, you're buying when the market's low, you're reinvesting the dividends, you're playing the long game. This is how you make substantial amount of money in the stock market. There's a million different ways. The key to success in this industry is to manage your risk. Whatever type of trading or whatever type of investing that you're doing, manage your risk and learn the nuances and respect the game. I hope this was helpful. If you found this analysis to be helpful in your journey, consider subscribing to the channel. We certainly appreciate it. And always remember that the markets are very risky, and to dot your I's, cross your T's, and don't forget the Z. God bless and happy investing.